Let's talk to Clive Lambert. He's the Director of FuturesTechs. Morning to you, Clive.
Hello, Nick. Good morning.
Right, one slide with a number of markets here.
Yes.
What's this all about? What's your theme today?
It's all about something that I seem to have been talking about all year, which I don't usually talk about and don't usually think a lot of, which is the 200-day moving average. Now, in technical analysis, people use moving averages as a proxy for market trend. Bigger picture, many people have traditionally focused on the 200-day moving average as a key mark to tell you what's the bigger picture trend. Are we bullish or bearish? Big picture. And so the one slide that's up on the screen, hopefully you're not looking at me because it's Friday and I've had a long week. The one slide you got there, top left-hand corner, is the S&P 500 futures. Now, it's well documented now. We saw a big sell-off back in February, and as you can see on that chart, it's on the left-hand side of that chart, we hit the 200-day moving average, that green line, and we bounced, and we did it twice, and they were solid bounces. We haven't been back to those lows since. We did retest that line and see one day closing below there at the start of April, but then rebounded again. Then we retested it again at the start of May, rebounded again. Then we retested it again at in October, dropped through, came back, dropped through, and then we've seen, October, as we know, we saw the S&P down to 2,600, and in the this week so far, we've seen a solid rally. Where's that rally taken us to? That chart shows us it's taken us to the 200-day moving average. Is this green line on the chart that everyone seems to look at going to cap the upside, and are we going to see sellers returning at this? Is this level going to turn from support into resistance, and are we going to see sellers returning? That is the big question for me on the S&P as we end what's been a pretty busy week with lots going on. And we've got and it's not done yet because we've got the US employment report this afternoon. One clue that we might be getting from that chart is actually every time we bounced from that green line earlier in the year, it was rising, and actually now it is falling.
Right.
Only ever so slightly, but it doesn't turn over quickly, this one. It's 200 days worth of data. But it is starting to fall. So there may be an extra clue there. Now, top middle, I've spent quite a lot of time on that, so I'll try and shoot through the rest a little bit quicker. Top middle is the Dow futures, which is the one that Mr. Trump likes to talk about. The Dow, and we can, same sort of thing happened earlier in the year. Every time we went, dipped through here, we got back above there. Everything was okay in the world. God bless America. The break at the end of October was a bit more serious. That line again has started to fall and is at 25,125 today, and we're above there overnight. We've got back above this line, so that's telling a slightly different picture to the S&P, and there's a bit of a head scratch. So we'll have to see how that one resolves itself over the coming days. Different pictures from two indices that are tracking the US markets. I personally would put more reliance on what the S&P chart's telling me, because there's 500 stocks in the S&P and there's only 30 in the Dow. The DAX is the top right-hand chart, and we can see that the 200-day moving average, it hasn't been such a clean and clear indicator of trend for us. We've cut through it a few times earlier in the year, and then we got to sort of late July. We tried to go back above it, we failed, and we've been selling off ever since. And it's quite a long way away from where we are now. It's up at 12,400 and something. So we're still a long way from retaking that in the DAX, in the German market, and the FTSE looks similar. So we'll go to the bottom row because actually I'm started. I did a tweet and a LinkedIn post earlier in the week where I posted this chart and I just put, is this the year of the 200-day moving average? And I thought maybe coming on here today would be a good opportunity to expand on that a little bit and to try and add some value, because actually the bottom three charts are other markets. Okay, bottom left, Bund futures. German 10-year benchmark for Europe in bond markets, and we can see from that chart that in early October we bounced from the 200-day moving average almost to the tick. Okay, that was down at 157.33 at the time, and since then bunds have come back to 160.90. We've obviously seen a flight to quality trade going on in bond markets whilst equities have been selling off, and in the last week while equities are trying to recover, we've seen bonds giving a little bit back, so that's what's going on there. If you look at the US 10-year chart, it looks very different and it looks very bearish, so higher yields still a thing to be looking at there, but as we've mentioned before, different rate cycle. Let's try and crack on with this and get this done. The bottom middle is Brent Crude, and that bounced off its 200-day moving average in mid-August quite beautifully. It was down at $70 a barrel, and then we saw a rally right up until the beginning of October that took us up above $85. But we've since given that all back, and yesterday we broke the 200-day moving average, which obviously unless we rescue that very quickly today, that is a bearish development for Brent Crude.
Understood.
And the bottom right chart is something that I've talked about with you in the past, and you were scratching your head going, what is he on about? I've never heard of this. It's the EUA carbon emission futures. A lot of my clients are in the energy space, and this is carbon credits basically. I won't get into the details of it, but it's been the market of interest in the energy space this year, because it actually went from sort of €10 to €25 and was in a really nice solid trend, charting beautifully, and then fell over. It fell over, and in the last week we've found support.
On the 200-day moving.
Where have we found support? Wow. At the 200-day moving average. And so even markets that Nick Batsford's never heard of or not really, doesn't know too much about, it seems to be respecting this 200, respecting the 200-day moving average. And it's interesting to me, so I thought I'd share it.
On that note, Clive, thought-provoking as always. That's Clive Lambert from FuturesTech. Thank you very much indeed.
Thanks, Nick.